In the currency quadrant today, looking at the yen with a very small rebound today. We actually had a decent day in the yen, and then it kind of closed with a push lower over the last, say, 3 or 4 hours of trading, moving back down towards its lows, but still finishing up over yesterday's close and over today's open. We have basically 5 of the last 8 sessions with lower lows in the Japanese yen futures. Today we didn't quite get there. Yesterday's low on the December futures, 92.16.5. Today got to about 92.20. But again, with that late day sell-off, the weakness clearly continues since we made the last kind of swing high about August 21st. The yen is actually down about 3.8%. The China threat is part of the reason that region has the potential to slow even more than it already is. China threatened unspecified strong countermeasures if the U.S. Congress enacts legislation that supports Hong Kong and supports the Hong Kong protesters. There's no detail as to what those strong countermeasures are, but you have to figure they're economic, currency related, perhaps treasury bond buying related, which China's already been shrinking their holdings of U.S. treasuries for quite a while. But again, until we get detail, the yen kind of sold off on that as that news came out. Again, no real comment from the White House on what those countermeasures are or whether they have anything to do with the Phase 1 agreement. And then lastly, looking ahead toward the data that's due, we had a pretty big sell-off in the dollar, which helped the yen fall. Again, yen finishing a little bit higher, but it fell later in the day. The dollar was down a little bit more than 0.25% on its lows. Tomorrow, or overnight, I should say, we've got Japanese CPI and foreign bond buying figures, the CPI being much more important, as the Bank of Japan has indicated that they'd be willing to start stimulus measures again, but weren't specific as to when and how much. CPI might give them a little bit more lead time to start letting the market know what that might be.